Well, good morning, everybody. My name is Amber Gunston. I'm the CEO of Austin Technology Council, and we are thrilled to have you all join us today with this conversation with Netspend. We have been focusing a lot on the funds that are coming out through the federal government, whether it's the PPP program or the EIDL. And today we're talking about how we can go about utilizing those funds, especially the checks that are coming through to us as individuals. And we're very proud to have Netspend part of this today. And Kelley Knutson has become a friend over the last couple of years since he's moved to Austin. And he is also one of our board members, and he's the president of Netspend. And he is going to impart wisdom on us today that I know I can use, and I'm presuming all of you can use as well. You have a couple of different options for questions. One is obviously the Q&A here on Zoom. However, we know sometimes people like to have a private question, especially when they're talking about finances, either for their business or their homes. So we do have Slido as an option as well. The Slido code is 12352. Again, that is 12352. And we will go ahead and put together Q&A at the end, but if there's any hot topics or hot questions that come through, we may bust in on Kelley's conversation and get those answered quickly. So feel free to ask questions throughout. I'm going to pass everything over to Kelley now because he's got a lot more interesting things to say than I do today. Kelley?
Great. Thanks, Amber. Really appreciate that introduction. And it's great to see a few familiar faces and names and clearly some new ones as well. And as Amber indicated, you can't really start an Austin technology event without talking about how long you've been in Austin. And as Amber said, I've been here almost 3 years now. I used to live in the UK actually for about 30 years, even though I still have a very strong American accent. I do carry both British and US passports, but I've known Austin very well for a number of years. Our parent company has had a business here in Austin, and so Austin is a great re-entry point in many ways for me to get back to the US. I've been in payments a long time from a lot of different perspectives. First with the schemes, and those of you that know the payments industry, I worked at Visa a number of years, then GE Capital, ran my own small technology startup business, then I was on the processing side, and now I'm in a direct-to-consumer prepaid business that we're trying to evolve into a broader payments company. So Jessica, if you could put up a slide, that'd be great. Jessica's gonna kind of work the slides for me today, so much appreciated there. So what I want to do today, I'll talk a little bit about Netspend and some of our products and services and capabilities, just to set the scene, and then I'll jump straight into clearly a lot of how COVID-19 has impacted the payments industry in totality, the role we've kind of played in that, and then some of the general trends we're seeing, and then talk about some of the learnings we've had, at least through this initial phase of COVID, and some of the things we see coming, and some suggestions in terms of areas that you might want to spend a little time thinking about if you're related to payments or are interacting with payments entities, or payments entities are providing you certain type services. And as Amber indicated, if you want to ask a question, send it through. We'll kind of pause at various times, and I'll try to field those questions accordingly. Jessica, next slide, please. So why don't I start a little bit with kind of who is Netspend? Some people might know it if you kind of spend some time in retail footprint across America. You maybe have seen our brand. You maybe have seen us if you're familiar with Austin. We have been in Austin about 20 years. The company was founded here, and its real initial purpose was to provide online spending for kind of the university students who couldn't get access to credit and didn't have some other financial products to participate in online transactional activity. The business has kind of really grown from there and really pretty much stayed pretty true to its roots. I'll use a lot of terminology today, but I'll try to define what some of these things mean too if you're not that close to it. So in addition to 20 plus years here in Austin, we've got offices in San Mateo, California, just outside Atlanta. We have a large technology shop in India. And then we do some of our call center servicing offshore, both in the Caribbean and South America, as well as in the Philippines, to support a number of different demographics of our core customer base. We're known in the industry, in the broader payments industry, at least today, as a prepaid provider. And depending on which metrics you use, we'd either be viewed as the #1 or #2 national leader in the prepaid space. I'll use the term today a lot, general purpose reloadable, or GPR. That is our core product that usually carries a Visa or MasterCard brand. And it's a product that you can buy either online, have it shipped to you in a virtual context, or from some of the brands that you see on this slide. You can physically go in these locations, or partnerships with some of these entities will provide products that we offer. If you don't know much about the prepaid industry, there are kind of different aspects to it. We're also what's known as a program manager. We basically run programs under our own brand, Netspend, but also a number of programs for some of the brands you see on this slide. We own our own platform. We're a pretty integrated technology shop here. We do a lot of API integrations with partners, with other technology companies, but our core platform, we operate ourselves, we develop on it ourselves, and we integrate even into some of our other workflow activities in terms of front-end acquisition of customers or partners. We do our own servicing off our platform, and then we do a lot of our risk controls and monitoring off our own platform as well, even though we have partner software and products that we plug in. I'll come on and talk about our products. We basically had a single product for most of our life as a prepaid company. Really, it's only been in the last few years as we've started to pivot and diversify into other product sets that we've actually become a more diversified and more robust product company as well. And I'll talk through that a little bit. What really allowed us to grow the way that we've grown, and so we were a startup, obviously, from the ground up. Today, we're over 800 million in revenue, so a fairly sizable organization. And we've really built our business on distribution. We have today about 120,000 distribution locations across the United States, from a number of the brands you see here, plus other brands. You can pretty much find us in most grocery stores, pharmacies, a lot of dollar stores. We're also big in the tax vertical. A lot of tax preparers use our product, and I'll come on to that because it's quite important for the stimulus discussion we'll be talking about today. And then we also have a pretty dominant place within the kind of check cashing, payday lending, kind of physical infrastructure of the US for the underserved and underbanked as well. That's kind of a big part of our historical customer base, really falls into that particular profile. We've diversified quite a bit. We've moved into a number of other customer segments, but really where we started first was with students that needed access to online transactions, and it really evolved into the underserved and underbanked who primarily use a prepaid card or a GPR card for their primary banking relationships. We have a pretty intense partnership model. As you look at some of the brands on this slide, we spend a lot of time with these partners, both developing their programs, their products, integrating into their technology, and really being part of their end-to-end experience. And I'll call out a couple, PayPal as an example. We do pretty much everything for PayPal's GPR product. So if you were to buy that product either online or in a retail location, we pretty much manage the entire program, including the marketing, including the life cycle communication, including the onboarding of the product for PayPal as our partner. Another good example is Samsung. We actually power the Samsung Pay Cash virtual account that if you have a Samsung phone, on your phone, in your wallet, there is a default Samsung Pay Cash virtual account that we actually power and run on behalf of Samsung. And our solutions vary quite a bit based on these brands you see here. And we have a lot of different type programs in place. The other thing worth noting, Netspend is actually now part of a parent company called Global Payments. Global Payments is a New York Stock Exchange organization that's quite large. It's about $8 billion in revenue. It's got a pretty strong global footprint. And it wasn't too long ago that Global Payments merged with Netspend's previous parent, Total System Services, in the industry known as TSYS. So TSYS and Global merged recently to form a fairly large global payments company. And as part of that, Netspend is a component within the global payments universe. So that kind of gives you a little more background on who Netspend is, kind of how we got here, some of the partner brands and relationships we have. And now what I'd like to do is talk about some of the products and then jump into the main body of today's session. So Jessica, if you could move on for me, that'd be great. Here is kind of an example of our core offering. This was the single product we had for most of our entire life as an independent company first, then private equity owned, then owned by TSYS, and now owned by Global Payments. So we've gone through a lot of evolutions as an organization, but at the heart of it has always been this core general purpose reloadable product. It looks very much like a traditional bank account, barring a few things. You can make direct deposit, you can get mobile alerts. We have a savings account. Actually, our savings account interest rate is probably one of the best, if not the best in the country. We pay 5% on deposits up to $1,000, which is pretty good compared to your traditional retail bank and even some of the other institutions out there. Clearly, a lot of the other features, ATM access, bill payment capability, zero liability for fraud. We do have some merchant rewards and loyalty programs built into some of our programs. And we do have a series of virtual accounts that are really embedded in other brands' ecosystems. We do a lot of custom cards. And one other thing that's quite unique about our proposition, and you're starting to see it in the market today with a lot of people copying it, is when you actually make a direct deposit, you actually get your funds 2 days faster than you normally would with any traditional retail bank. It's a unique selling proposition for us. It's a proposition that clearly works for gig economy workers, the underserved, the underbanked, and more some of the youth market and even some of the more mainstream market. Getting your actual paycheck and payroll 2 days faster is actually a pretty significant advantage in the marketplace if you're worried about cash flow and you're worried about how are you going to live paycheck to paycheck. Jessica, next slide, please. So we started out with that product. Then we said, you know, we actually need to look more like a traditional bank account. And so we kind of modified that product and we started to upgrade a lot of our core customers into an even more robust DDA or demand deposit account, which is just like your traditional retail debit card account, tied to, in some cases, an overdraft and some other broader banking access capabilities and kind of insurance coverage. And we found actually that a lot of our core customers that were truly using it more as a regular bank account wanted to feel like they had some of those additional features. So our first step to broaden our product set was to move from this GPR product into more traditional DDA or demand deposit account product. And a lot of folks who maybe just use a prepaid card once a year during the Christmas time, maybe as a refund for their taxes, and then spend off on it, they kind of stay with the GPR product. But a lot of our customers have actually migrated into a traditional bank account not offered by a traditional bank. We found a lot of success now in acquiring new customers across a number of demographics, and we think we can differentiate ourselves really built around three things: a pretty decent mobile experience, this 2 days faster concept that we've translated into our DDA product, a higher amount on a savings account, and then a lot more flexibility around, do you want to pay monthly? Do you want to pay per transaction, or some combination thereof? So we've created a lot of flexibility, and plus we're now starting to brand the ecosystem, whether it's some of our partner brands who are using our technology, and we're actually going out with a slightly different brand proposition with the Netspend name also. And so you'll probably start to see a number of these retailers, some of the brands from the previous slide, actually come out with DDA propositions, even though they're not a bank themselves, but they'll be utilizing people like Netspend to bring those kind of capabilities to their core customer base. Next slide, Jessica, please. In addition to that, we have another part of our business that really focuses on the payroll industry and people where there's a high turnover, provide payroll services for small companies, small businesses, or specific verticals or sectors. So we have a pay card product that replaces traditional checks, and the payroll funds go on to that, and there's a whole series of things associated with that. Recently, we've invested quite heavily in a tips network where the restaurant vertical, the gig economy, and folks that want to get paid either at the end of their shift, at the end of the day, multiple times a day, or you actually want to reimburse them during their shift for things like gas or whatnot. We've come up with a pretty slick system that allows actually payroll to happen today, multiple times a day, multiple shifts, and outside a normal cycle. And we're seeing that trend really catching hold, especially now where there's quite a bit of movement in terms of jobs and people getting unemployed, taking part-time work, maybe being unemployed a bit, finding other part-time work. And it's a good solution for small businesses that actually don't want to stand up a heavy payroll activity. And then we do a number of kind of simple disbursements for companies that want to hand out disbursement cards to thank their employees for various things that might be going on in companies. So we've got now a pretty wide array of product capability to fit a lot of verticals, a lot of different customer segments, and things specifically in the small business framework, which I think is going to be very exciting as the market continues to evolve. Jessica, next, please. Another thing that we're pretty big on that I think is very important when we think about COVID and the stimulus program and what a lot of companies are doing now, we're very big in the community. We've got kind of a community connect day where all our employees physically go out into the markets in which we work in and do good deeds on that day to support unsuspecting citizens in Austin or San Mateo or in India or in Atlanta. We have a scholarship program for our cardholders that we raise quite a bit of money through sponsorship plus our own funding, and actually hand out scholarships to help people with their furthering education. Most of it is really in targeted areas, community colleges, educational fields around healthcare or teaching and education to give our customers a leg up. And then we have a pretty large community outreach program and a lot of diversity in terms of the type charities we support. But a lot of this is really built around how we look at our own customer base, how we look at the small business, and how we actually are trying to help our own customers who do fall into that category sometimes, that they need other kind of help. So that's kind of a little bit of background, but I think as you hear about the stimulus, you'll understand why our vantage point on the market is a little unique. And especially when it comes to what's happening in these stimulus programs, it really is a big portion of our existing customer base that are benefiting from that and are really needing that to make it through this tough period. Next one, Jessica, please. So I'm going to transition now, and this was actually a clip from a nightly news program during the first week when stimulus payments were actually issued. Really within our first week to 10 days, we actually were able to distribute about $1 billion in stimulus funds to our existing customers and customers who went out to get our product as a load mechanism for some of these stimulus funds. So we were kind of top of the news when this program started. But what I'd like to do is spend a few minutes really going into the stimulus program, the CARES Act, and some metrics, if that would be of interest. Everyone hears about the CARES Act, but very few people can actually say, what does CARES stand for? It's the Coronavirus Aid, Relief, and Economic Securities Act that was passed and signed off by the president on the 27th of March in 2020. Obviously, feels like a long time ago now. And actually, as part of that overall package, there were a number of components to it. A number of Austin businesses and consumers benefited from, whether it be direct relief, loans, foregoing of various things. But that total package was about $2 trillion across the board. The piece related specifically to us and our customers that we serve really addressed those folks that made less than $75,000 a year as individuals, $112,500 if you're a head of household, and if you were a married couple, $150,000. So that was kind of the break points. And in terms of stimulus payments that went out, if you were at that individual level, you've got $1,200, a couple got $2,400, and then you got an additional $500 per child in the household. So that's the way in which kind of the funds came to us from the government, and then we dispersed them out to individuals. It was a combination of the Treasury and the IRS that were tasked with dispersing these funds. They were able to reconcile people based on tax returns or Social Security or various unemployment, and then they used various existing mechanisms to actually find a way to, number one, identify the customer and then get funds to that customer. Nationally, at least in our piece of it, when it came to the consumer side, there's been about $90 billion delivered to about 130 million Americans, not just for us, but across the industry on the consumer side. In Texas, there are about $21 billion was delivered by the Treasury or from the Treasury through people like us to residents of the state of Texas. There's still some stimulus money coming out right now in the forms of checks. That process was extended over a much longer period of time, and there's still some funds coming in through unemployment type insurance at the state level across the US, even though a big bulk of this first CARES Act stimulus for consumers actually has been deployed already and sent out. A couple things though as part of this process and some learnings I think for this first round, because we do anticipate a second round. I'll come on and talk about that momentarily. But really, there are a lot of IRS issues related to this. Consumers had problems receiving the funds, accessing the information, really getting timely information, et cetera. So there was a level of frustration for part of the equation, but for part of it, it actually went pretty smoothly. And we were part of that first wave where customers that in either 2018 or 19 that had filled out a tax return had a tax refund. The government actually sent us funds, those numbers I mentioned, and we are actually able to quickly turn around and distribute those out to those needy Americans that met that criteria. So that first wave based on income tax information was probably the cleanest and easiest. I think the second couple waves were a little bit harder. There was a lot of wait times. There were a lot of issues with the IRS website. There were technical failures. There were lockouts of the website. Once you got in, sometimes you had an error message of payment status not available. And so this initial round, I think, was a little bit cumbersome. And I think both the government and service providers learned quite a bit around what would be needed next time. Also, there was not a phone number available for answering basic questions. They thought everyone could get access online. Interesting enough, that caused a huge issue for people like us. And I would say probably 70% of the calls we got were nothing regarding our account specifically, but asking about stimulus and timing and what was the status of individuals' disbursements, et cetera. So we got really overrun by customer service inquiries, really unrelated to things specific to us. And also in terms of the check process, it's just dragged down a little bit too long, and they're still filtering out there. And so kind of the first wave went really well if you actually filed income tax returns, but some of the subsequent stages were a little bit clumsy, and I think we've all learned a lot in terms of how we can improve that the next time around. In many cases too, a lot of customers or consumers, I should say, threw out their paper checks because they thought it was junk mail. So they actually had a valid check from the government. They kind of thought it was a traditional mailing. They might have ripped it up and threw it straight away. They also had a specific government program and a default provider that actually sent out prepaid cards that were preloaded to certain addresses, and customers there too thought it was just a mailing for a credit card and threw the mail out, threw the card out, and threw their funds out as well. And so there were a lot of things that I think could have been executed better, but I think everyone was so keen to try to get the funds out in the hands of U.S. citizens that, you know, there were a few things that probably could have been done and executed on much better. There is a second round of economic impact payments, EIPs. You probably read a lot about that, and that's kind of what it stands for. Similar to kind of this first CARES Act, there's a second bill that's been passed by the House, which was just passed in May, called the HEROES Act. And it's really going through the process now, the Senate for approval. Clearly, there's a lot of politicking on what's in, what's not in, what's the emphasis going to be. But it does appear that this act probably, we believe, will be agreed on. We don't know what it looks like just yet, but before the summer recess. We do think the emphasis will probably be around families and children and other dependents. And we think actually that dependent number that was originally 500 in the first round could potentially be upwards to 1,200 per dependent with a cap of 3 dependents in this next wave. So I think the criteria and some of the disbursement will probably look a little bit different next time around. I think the important thing to know is this was really an entire payments ecosystem play because consumers obviously have different relationships across the board. And whether you're with Chase, Wells Fargo, B of A, some of the fintech providers, PayPal, Chime, Borrow, people like us, people like Green Dot, one of our big competitors, everyone really played a role in finding the best way to actually receive these funds and then push it out. And really, we're pretty pleased because there was probably, somewhere between 4 and 5 million consumers that received these funds on a Netspend product through ourselves and our primary bank partner, MetaBank, and that could be of different brands, et cetera. So we're really pleased to be one of the first to get the funds out there. We always advertise 2 days faster. When it came to these government funds, we actually got it to people about 4 days faster, and that's why we got a lot of news coverage. While the initial burst was $1 billion, we actually ended up dispersing about 1.4 billion, and almost 1 million households across the US were able to receive their funds, on a Netspend product once we got through really the first 3 or 4 weeks. I mentioned previously some of the challenges we had on the customer service side. Like everyone else, we're in the process already of shifting a lot of our people work from home, which we did quite quickly, and we had about 98% of our people working from home once the COVID lockdown really started within a matter of a week or two, including our customer service agents. And during the stimulus, we actually got really hit twice. We were just coping with the working from home, and then we were inundated with the stimulus calls and people that wanted to talk to live agents. We did do a lot with trying to link things back to government sites. We did a lot within our own mobile app and on the phone in the IVR to get people to sign up for digital engagement. And I'll come on and talk about that momentarily, because I think that is an important element here. Jessica, would you mind kind of moving on? Good. Let me talk a little bit about some of the trends. And on this first slide, this is really spend trends that we saw. And I think as I've looked at some of the national trends and what else is happening, they look pretty similar. But I think because of our demographic and kind of the profile of our customer, they were probably weighted, a little bit differently. But clearly, when we looked at the spending right after the stimulus, it was heavily geared toward groceries, fast food, pharmacies, and gas, which those categories are common. But when you looked at the average size of the spend, frequency, it actually became a much bigger proportion of the total. Interesting enough, and we weren't quite sure about this within our demographic, but when we compared this same period last year, we actually saw 130% year-over-year increase on digital goods. And for our customer base, here again, based on the traditional demographic, we thought they wouldn't really embrace some more of the online internet shopping spending, but we actually saw a pretty big shift of a traditional base that stayed away from that because they liked physical engagement, moving into digital goods and services, and a really pretty big shift in terms of that year-over-year spend. The other thing we saw, which is quite interesting, because normally during tax season, when people get a refund onto their prepaid card, they usually go out and take cash off right away and use cash within the greater economy. What we've seen here, and we thought it would look a lot like tax season, we actually saw a 10% decline in cash access. I think that was a combination of people got their funds, they could go to the shops mentioned above, and actually they were trying to stay away from physical cash itself. So we did see a bigger decline than we thought we would. We actually had a pretty big increase in mobile app downloads. So people that hadn't been using the app previously, pretty big turn up in terms of downloading the app and then using the app. And interesting enough, we've seen a year-over-year increase of 50% of people that actually were taking some of these funds. And here again, unlike tax season, where they would spend off or take cash right away, they actually held at least a little bit of a balance in there. Because of our demographic and because of a pretty generous 5% savings rate, we do cap that out at $1,000 balance at 5% on our GPR product, and a 6% savings rate and a $2,000 cap. But actually for our demographic, most people don't have much more than $500. But because of the stimulus, they were actually holding on to their funds and actually collecting at least that incremental higher savings amount in their savings accounts that they could spend off later in time. So we saw a pretty big jump in the savings account balances and savings account usage. And the other big increase clearly within our app, like a lot of apps within retail banks, you can take a picture of a check and do the deposit through mobile check load capability. And we saw a huge increase of that for people that physically got their check. They clearly, in most cases, couldn't go into a bank because they were closed. So they actually used that feature for the first time. And so we saw a pretty big increase in that capability, which for us was really exciting because those are the type features you want your customers to use. But a lot of these trends and a lot of these activities were really driven by the COVID, number one, and then the stimulus coming on the back of that, number two. Jessica, could you move on to the next slide, please? And taking it from kind of our experience, and I'm going to step back and wave because obviously I've been standing still too long. My light went out, so apologies. Have to improvise a little bit here today. Let me talk a little bit about some industry trends, and then I'll come on to a few more learnings, best practices, and things I think for this group to consider. When you look at the industry, Visa and MasterCard collect a lot of general volume trends and activities. You know, when you went from March to April, there was a pretty big drop off in terms of their normal spend activity. It fell off about 18%. May, the drop off was about 5%. And so what you saw was clearly as the economy started to reopen, even at 25% or 50%, et cetera, the spending behavior overall changed, and actually the mix changed a little bit too. And so, you know, some pretty clear correlations, especially by SIC code or vertical, and clearly restaurants and travel and other verticals were hit the hardest, which we read about every day. But sometimes you see the highlights and the high level numbers, but actually it's only when you get into the individual customer segments or certain type transactional trends that you normally see, and what you're seeing a shift take a different shape. Here again, for our customer, the traditional user of prepaid or the traditional kind of new to DDA, demand deposit account usage, they're not doing a lot of T&E, and they're not doing a lot of kind of certain type restaurants. And so the actual spending behavior of the type individuals that use our product in this part of the economy actually was more funds available, greater spending, and similar type spending versus some of the norm across Visa and MasterCard statistics that are both debit card and credit card. And so, you know, convenience stores hung in there, clothing stores didn't. Obviously, restaurants fell off. Obviously, T&E fell off. Groceries boomed. You know, gas kind of was low at the beginning because gas prices fell, but people are now traveling more, especially moving into the holiday season. Instead of flying, they're driving. And so there's some interesting new trends, underlying trends, evolving from a payment behavior point of view than we actually had seen, and a number of things have really been accelerated. And one of those things are really cashless payments and contactless. The US really lags behind almost all the rest of the world when it comes to contactless payments. For whatever reason, US consumers were really comfortable up until recently continuing to sign for things versus tap and go, which is quite popular in Asia and pockets of Europe et cetera. But really, when you look at March last year to March this year, contactless payments grew by about 150%. And today, Visa, as an example, has about 190 million contactless cards in the market. So for you, whether it's a credit card, but they started really with debit cards, they came out with the chip, and then they came out with the chip with a contactless symbol on the card. And so gradually, Visa and MasterCard, banks, and people like us are getting EMV chip cards and contactless cards in the market. And those that actually were in the market with those products, you actually saw some market share shift because consumers didn't want to hand over their card. They didn't even want to put their card in the machine and type in their PIN. They were happy with tap and go. And so contactless had a big jump in the US during this period. And I think that consumer behavior acceleration is really coming into its own. And today, probably 80 out of the top 100 merchants in the US now accept contactless. And MasterCard just did a study recently where last time it was probably in the 20 or 30% respondents said, yeah, we're not really into contactless. And now 82% have said it's a cleaner way to pay, an easier way to pay. Also, mobile wallets. We're pretty involved in that. No one has really cracked the code entirely, but all of us are gradually starting to put more payment devices into our wallet, or there's a wallet embedded in some app that we already use. And I think what you're starting to see now is that mobile wallet usage is starting to peak and people are getting more comfortable both with the tap and go with their card, but also in-app mobile payments, either online as part of the commerce experience or even at the point of sale by tapping and going with their phone. So I think the virus from a payments industry point of view has really changed and accelerated consumer behavior quite a bit. We talked about savings accounts. We've talked about a shift a little bit in card usage. I've talked about the mobile check loads. And so some pretty interesting dynamics across the industry that mirror aspects of what we do, but I think have a bigger impact in some of the other financial institutions when it comes to customer behavior. Jessica, next slide, please. So really, when you think about the future of payments, regardless of kind of what industry and what technology you have, but you know, payments do play a pretty big role and will continue to play a bigger role. Cash will come out of the system faster maybe than it was previously. Checks, I think, will come out of the system faster. The trends we're seeing and the themes will really be a lot more embedded accounts within an app, or your ability to actually load up your wallet with new virtual accounts that tie to your plastic cards. Digital banking, you know, most of the new hype is about new digital banks that are coming out and the ease and seamlessness and way in which digital banking is easier, and even traditional banks have offset a number of things by accelerating their activities in digital banking. I've mentioned cashless a lot today. I think the US got a huge boost out of this terrible situation when it came to cashless payments. Mobile ordering, I haven't touched on that a lot, but that's an area we're seeing a huge lift in clearly. You know, these restaurants that had to flip their models to takeout, to go, delivery, the whole interaction of the mobile ordering process. And I think even you've seen it probably if you've been using takeout of late, you know, the number of brands that have actually come up with their own apps that have an embedded payment as a default, or actually created in their own wallets and as part of the ordering process, making that much easier. Online payments, clearly, a lot of people are going online versus in the physical world. The metrics are jumping, you know, off the charts in terms of online payments and real-time payments. More and more, we're expecting the ability and capability to do person-to-person transfers, whether it's through PayPal or Venmo or other capabilities. If you have a Netspend card, of any of those brands, you get free P2P transfers as well. Our system is as slick, easy, user-friendly as PayPal. We don't really promote it much because we have a different type ecosystem. But if you have any card on the Netspend ecosystem, you can do P2P transfers and payments. You can now start to load from your debit card into our account, move it from our account onto other accounts. And so this real-time payments concept is really taking off in a bigger way as well. Jessica, next one, please. So really, for me, the key takeaways, and regardless of what company you work in, what technology you're playing with, when you think about payments or you think about interacting with payments in the industry, there's really 4 key takeaways. Build out digital wallet capabilities. People are really ramping that up. They're trying to figure out how their wallet can play either on its own or embedded within your own wallet in your phone. How can you enhance your mobile application experience? Clearly, mobile first, and the flow within the app is something that everyone is over-engineering on. Offer digital or contactless payment options. Before, everyone said, yeah, that's going to take 5 or 10 years to really take off. I think it's been accelerated because of COVID and also because of the stimulus that exists. And I think for us and a lot of people in the industry, it really is, how can you onboard customers seamlessly, verify who they are with whatever documentation you need so you don't get fraudulent activity, and then how do you engage with that customer end to end after you board them? So covered a lot of ground in these 45 minutes, but I think it's very exciting times. I just want to say, I hope you and your families are doing well. It's not an easy time right now for anyone. Clearly, I think here in Austin, across Texas, things are getting harder, and I think we just have to kind of brace ourselves and make sure we have the right mindset to kind of navigate this next phase. But I think if you're in the payment space, if you're a recipient of stimulus, these are some of the things that I think are important for you to know, and I hope today has been helpful. I'll gladly take some questions now.
Thank you, Kelley. This has been so helpful. I actually do have a quick question, because there are a lot of companies who have employees who are doing work from home, and you've got companies like Google and Facebook who are able to say, hey, we're going to give you $1,000 to go get whatever you need to get and everything else. But it's also really kind of hard, because it's like, do you direct deposit that? And what if somebody doesn't need to have access to it? And it sounds like that's something that, could be utilized through Netspend to say, we're going to get you deployable cards, because we don't know how long this is going to last. I was talking to Jessica before this popped on. She's like, yeah, my printer stopped working. It's like, okay, well, then I need to go get you a printer for your home. And, things like that, where, it sounds like this is something that businesses could take advantage of to get to their employees. And instead of saying, I'm going to order something and have it shipped to you, and going through all the logistics of trying to get it to their home, that we can almost, as employers, get these cards, load them up when they need to be loaded up for something, and just make it easier for ourselves and our employees.
Yeah, no, I think there will be a lot of that. And I think it'll fall into 3 buckets. I think, there's traditional gift cards that you can go out and buy and give to someone. You don't really need to authenticate, really know who that is, etc. There's prepaid cards, and when you move to DDA accounts, there's a certain level of verification and documentation and proof you need to do, because we are a regulated entity, and that is important. And then you also have something called disbursements. and a lot of companies are doing exactly what you said. They're actually saying, hey, I'm going to order 1,000 disbursement cards. I have the ability to go online, load it on, hand it out to so-and-so. I can top it up next month. And people are starting to, and I use the word compartmentalize. And I think, we went through a phase where we all had all these cards, and, it gave us different points and loyalty. And then people kind of started to consolidate back. I want to minimize my relationships. I think what you're seeing now is more compartmentalization going on what brands you and I like to shop at and what's happening within that ecosystem. And I think some of what you've talked about is going to happen now. Employers are going to say, for these type things, I want to compartmentalize that spend because I don't want it going into my primary Wells Fargo, Chase, whatever account. I want to be able to ring fence it, compartmentalize it, and have transactional activity associated with that. So we think there's going to be a growth of accounts that are going to be used for specific purposes, attached to certain brand loyalty and recognition, and certain affinity as well. So I think you're going to see more cards, more accounts, and people are going to start putting money in different compartments for certain lifestyle activity.
Well, yeah, but I mean, I did sales for years, and for salespeople, especially those starting out, it's really hard for them to say, hey, I've got this money to go do these happy hours and these lunches and these client dinners and everything. And especially when they're traveling, which hopefully we'll all get to travel again someday, but being able to access that and make it easier, it's not putting stuff on their own personal credit cards, it's giving them the opportunity to do that. So, and everybody has the ability to ask questions here. I'm just asking questions because I love to ask questions. It's my favorite thing to do. But we're talking, you and I have been talking for a long time about the mobile payments space, and the fact that, using that mobile wallet, which I'm at the point where if somebody doesn't take my mobile wallet, I'm reducing the amount of time that I purchase from them. When you're looking at it from a company perspective, and you're trying to identify like this whole aspect of taking mobile payments, or how you're processing credit cards, or all of these other things, like what is the safest way to go about starting to use it? Because you and I've talked about it, but I don't know how familiar everybody else is with the security and the safety around the mobile payments aspect.
Yeah, I think it's changed quite a bit. I think it is much more secure than it used to be, but like with anything related to your phone or your card, there is risk, there are fraudsters, there are security things. I think more and more people are doing probably three things. First one is they're basically taking their existing physical card and putting into their wallet within their phone, and then choosing how and where they want to use cards based on merchant, based on size of transaction, based on where their funds happen to be. And then I think what you have people doing is every month pushing funds out to specific apps that have wallets, whether it's a Starbucks app or another fast food app or something else. So when you're shopping within that ecosystem or brand, you have a choice. You've got funds in a wallet within that ecosystem. You can actually use your own mobile app, or you can actually say, no, this is a one-off event. I'm going to pull out my card and key my card in, and I can either choose to register that card or make sure I don't. And so you also have people that each time will pull out a card and use it in an unfamiliar site or maybe the first time in their app, and not let the app store those card details. And I think you're starting to see individuals kind of move across each of these buckets where, hey, I'm okay putting my cards in here. I'm okay in certain ecosystems, loading money. And over here, I'm gonna use the card physically every time. I don't want them to store my account details. And so I think a lot of it will really depend on kind of your risk tolerance, size of transaction, and quite honestly, how comfortable or how secure you think that particular brand or ecosystem is. And, over the next couple of years, Google, Amazon, every large entity either already have some kind of wallet. They're going to come out with different type wallets and segment wallets that have certain advantages for different tiers of customers, or they're going to create a marketplace of wallets so they can attract other people into their brand who might have another brand preference. And so I think the wallet wars have really just kicked off. And I think there'll be a lot of winners, but I think it will come down to personal preference and which brand do you really feel gives you the best value, the easiest access, do you feel has the least risk, and do they have other benefits that allow you and force you or encourage you to transact more often. So I think today's world looks a lot different than it even did 5 years ago when it comes to what people are willing to do. And back to the word compartmentalization, I think we all do it sometimes more knowingly. And sometimes I think we're not afraid to throw $20 into a Starbucks app and not think about it and use our Starbucks app, but we're not going to put $200 in it. And so I think it will vary based on frequency, your risk tolerance, and which brands you really trust.
No, and that makes complete sense. And, when we look at, I mean, I think one of the things that the companies really need to be focused on is how comfortable you are putting your business into a mobile wallet aspect. So our bank said, oh, do you want to have mobile access through our app on your phone? I'm like, no, I'll still do the traditional aspect of it because that's one area that I don't want to see from a security aspect be breached. It's so much easier to control the swipe of the card than it is to see the app aspect. And I see that Jessica also commented about getting receipts every time her husband uses the mobile wallet, which is a huge convenience for that because that pops up pretty quickly. So, this aspect of cash is, I think for years people said, cash is king, cash is king. And I think having liquidity is what people are going to be focused on moving forward. But the actual use of cash, I live downtown and I don't know of anybody who's allowing, other than if it's someone who's experiencing homelessness, they'll still allow those folks to use cash. But everybody else is saying you've got to use a credit card, especially the restaurants. They're not accepting cash for any reason.
Yeah, I was actually in downtown recently, and I literally was going to give a gentleman who kind of washed my car window some money. And I said, I don't have any money. He goes, that's fine. I've got a cash app. Here it is. Just send me, a couple bucks. And I went, yeah. Okay. And so I think people are also getting more comfortable. They're still in cash mode, but they keep a balance in PayPal or Venmo or Cash App or in their Netspend account for those purposes. And so moving money now P2P and moving cash, in people's mind, it's still cash because it's the use case or what's driving that behavior versus a physical exchange of notes. And they still feel as comfortable, as protected, as private. And you're going to see that happen a lot more. That's a generational thing. There's certain profiles that are much more comfortable with splitting bills at restaurants, or literally when something happens, just Venmo me or Netspend P2P me, et cetera. But I think you're going to see a lot more of that I think will, I think notes will still circulate. I think you're going to see a big drop off of coins in the market. And then I think the other thing you're going to see is ecosystems where you can have the acquirer of that merchant and maybe a card related to that merchant, and that's handled what's called on us within that ecosystem. And so more and more you're going to get offers that say, hey, if you have an ABC branded virtual account and you use that account with me and my brand, I'll give you a discount. But if you want to use your Visa and MasterCard, that's fine, but here's the price it is. And so I think the concept of on us, especially in some of these bigger ecosystems that are kind of merchants that also want to have these virtual accounts, you're going to see a lot more of that happening here in the coming years. And that might get over some of the security issues too. It's like it's within your ecosystem. And by the way, when I'm in your ecosystem, there's a lot more data. I know you're going to be doing a lot of AI. And is that comfortable for some people? Yes. For others, they hate it because it's too much. And so the technology's there. I think it's how you string it together with good marketing messages, a good user experience, and is the proposition strong enough to change that behavior away from one product or one behavior into something else. And I think that's what you're going to see a lot in mobile wallets. Freebies, buy one, get one free if you use your embedded cash or your embedded mobile app.
That's very interesting. any last questions from anyone before we end today? I know Kelley went over a lot of information, and there's so much that is still out there that we all still need to figure out, especially with the new stimulus program that is coming. In fact, I was reading about that this morning. They're going to be voting on it, I believe, in the next few days.
Yep.
So any final questions? Looks like we don't have any. Kelley, this has been so informative, and I took notes, and gonna talk to my tax accountant here in the next couple of days to get my taxes taken care of. And I think this has just been really helpful information. We will keep Netspend in mind as these new programs and this new information is coming out. If any of you have questions for Netspend, or you want to reach out to the team there, please feel free to reach out to our group at info@austontechnologycouncil.org. Again, that is info@austontechnologycouncil.org, and we will get you connected with the right person in Netspend. Kelley, again, thank you so much for the time today. It's always good to see you. I can't wait to see you in person again.
Yep.
And thank you to my team for being behind the scenes and making this happen. And we look forward to seeing you all very soon. And hopefully, if we all wear our masks and wash our hands and do all the things that we're supposed to do, we can actually see each other in person in the not too distant future. You all take care. Have a wonderful day.
Bye-bye.
Thank you.
Thank you.